Hey yo, good evening viewers of the tube. My name is Tyler and welcome to the channel that takes a thorough look into the cryptocurrency markets. We discuss it all: price movements, manipulation, drama, and the things many people would wish would just get swept under the rug. Get ready for a smorgasbord of information packed into under 10 minutes because it's time for Chico Crypto. Bitcoin has bounced back from getting straight up crushed on Thursday, and as of yesterday had bounced back to just above 11,800. Bitcoin could be heating right back up, getting ready to test higher highs, keeping the momentum and bullish run going. And on the surface, things are looking good for Bitcoin as the number of daily active addresses has surpassed 1 million from a low of only 400K in January of this year. The only other time Bitcoin has surpassed 1 million daily active addresses was in the last bull bubble in late 2017, early 2018. This does signal increased Bitcoin activity, but does it signal new blood entering the market? Not necessarily. This number is likely being fueled by increasing trading activity. Trading volumes are currently at a staggering number, reaching over 45 billion Wednesday. In the last bubble, when Bitcoin was around 20K, trading volumes peaked at just over 23 billion in early January. Volumes are nearly double today, but it is now known that a large majority of this volume is fake. Upwards of 95%, meaning the majority of exchanges are wash trading, using bots to create volume. Thus, many of these active addresses aren't new blood entering the market, but exchanges doing their laundry. So from Google Analytics, we can tell some retail new blood is starting to pour in, as the search term for buy Bitcoin has hit its all-time high in the last 12 months. But when you zoom out to include the last bubble, interest is nowhere near the levels seen then. This run is characteristically different than any run before. Higher volumes yet lower prices, and full-on retail FOMO hasn't even returned. Even with the differences, things are starting to look the same. Even with the lack of new retail blood, the Bitcoin network is getting used more and more. More miners are joining the network as the hash rate has surpassed its old all-time high, and the number of confirmed transactions is once again reaching peak levels. Increased network use equals more stress on the network, and this usually means higher Bitcoin fees. Well, high fees are starting to show their face once again like before, even though fixes were supposedly implemented like SegWit. Bitcoin fees peaked yesterday at over $6 on average. Thus, paying for anything at a merchant that isn't at least $100 becomes just plain stupid. This isn't nearly as bad as it got last run, when fees got on average of $35. But the increase in fees has been increasing with each price pump. Could Bitcoin follow the same fate and the network will become once again clogged and unusable because of outrageous fees? If Retail FOMO returns and you have the launch of big institutional products like BACT and ErisX, then the perfect storm to once again show the world why Bitcoin isn't ready for mass adoption might just come. I'm still a big believer in Bitcoin, of course, and it is my largest holding, but we need to keep an eye on the meme pool, transaction fees, and confirmation times, because if Bitcoin fails to prove it can scale once again, the doors could be open for altcoins who think they can. Now, switching gears, and let's talk about, once again, another centralized exchange exit scam. The crypto exchange Bitsane has ran off with the funds of 246,000 users. This wasn't the biggest exchange, and the amount lost by users isn't record-breaking. But there are things about this exit scam that need to be pointed out, and XRP and Ripple are involved. The reason the exchange got popular was influenced by some pretty big names. Back in the heat of the last bull run, CNBC put out the infamous article, How to Buy XRP, one of the hottest Bitcoin competitors. Not only was this a bad idea because Ripple was over $2, but as we can see below, CNBC puts out a tutorial and recommends Bitsane as the way to do it. Bitsane got its popularity through this article, and XRP was the dominant trading pair up until the exit scam. But you want to know what's even worse? Ripple actually shilled this exchange themselves. Just until recently, on Ripple's website on how to buy XRP, Bitsane was featured. Luckily, we got a screen grab before they took it down. Two big names, CNBC and Ripple, promoted what ended up being an exit scam. Multiple Bitsane users have reportedly gave over information to the FBI, and what will be interesting is what comes of this, if anything at all. The final topic I would like to bring up is regarding Facebook and their digital currency Libra, better known as Zuckbucks. I talked about Libra before, and personally, I'm not a fan. I believe it's corporate warfare and an all-out attack on the shift of power and ownership that cryptocurrencies and the blockchain movement are trying to achieve.
It is going to bother you because you're human, and I was human. I am human, still.
But a certain exchange has been trying to cozy up to Facebook and has been supporting its expected launch. This is an exchange who should not be named. CZ started it with a tweet right after the launch explaining why the coin has the best AML. Then last week he said whoever said Libra was bad for crypto. Let's get everyone in first. It might seem like he is trying to cozy up to Zuckerberg through those tweets. Well, as of yesterday, this was more than confirmed. In an interview with Jen Chow, Chief Strategy Officer for the exchange, he said that the exchange is in the early stage discussions with Facebook over the cryptocurrency Libra. We have had official dialogue with Facebook, said Chow. Regarding listing the coin, he said it wouldn't just be in Facebook's best interest to list their coin on our exchange, it would also be in their interest to list on other exchanges as well, and that's probably going to happen. The exchange isn't going to just stop with listing the coin. They're actually looking to become a validator node. In another interview with Jen Chow regarding Facebook, he was asked whether or not they were considering becoming a node on Libra's network. Chow said, "We're definitely considering it, and so we would like to throw our hat in the ring. Whether or not we will become one, we'll see." It's obvious they want to play nice with Facebook and be complacent in what is a threat to true decentralization. But as we know, their own chain is centralized, and they don't care about true decentralization. It's wealth, status, and power they care about, and the quickest way to that is through a centralized model. Cheers, viewers. I'll see you next time.